Hey, what's up? Welcome to my December 19 video trading the QQQ stock index and using the DXY or the dollar index as a confluence. So today I had the DXY bouncing off, forming a level of support here, which could indicate that the DXY would have rallied up. You know, a rally up on the DXY would cause a sell-off on the QQQ, and that's exactly what happened today. So around 9 o'clock you have the QQQ breaking down below some key support and resistance levels here, and also we have the dollar on the 9 o'clock candle forming some support here, on the 10 o'clock candle forming some support. But where it formed support here is why I decided to go short on the QQQ index, and that proved to be a winning trade here. I'll show you where I entered and where I exited. The only thing with this trade, I could have held it longer, but because I was moving my stop loss to in profits to ensure that I locked in profits, that's where the trade got kicked out as soon as the trade began to go against me a little bit, which is normal. So let me show you what happened today. So at around, this is at 9:30, so immediately when the market opened, that's where I entered this trade, because the DXY was forming a level of support there. I decided to go with my trade, follow my system, which would have been a 1 to 3 risk reward, and just stick by that. So if this trade were to go against me, I would have lost a max of 20. If it went in my favor and I had held it right through, I would have made a max of probably 60 or even more if I let it ride some more. But I'll show you where I entered here. So this is on the 9 o'clock candle, because it's 9:30. 9:30 is between 9 and 10, so it's a part of the 1 hour candle, the 1 hour 9 o'clock candle, which is this one. And I entered at around market open, which was 27360. 27360. So that's a little bit down, because as soon as market open, it started to kind of drill down, and it's kind of looking like we'll see more of this kind of pressure until the start of the new year, because most people have something that's called tax loss harvesting. So if you have like losses that you want to just lock in that tax benefit, so you don't have to lock in that you have a huge profit for the year, you don't have to pay a lot of taxes, you can sell out your positions if they're low and buy them back after around 30 days, and you wouldn't have caused a taxable event there. So this is where I entered to the sell side at 27360, and then as the market began to drill, I began to move my stop loss to somewhere that was in profit, and as you can see, it came right back up here and hit out my stop loss for a profit of $18 there. And that's what took me out. I mean, within the same hour, that's what took me out of the profit of the market with a profit. But that's okay. I'm really wondering if I should have I could have stuck to the system, yes, and made more money, but at the same time, if the trade had went against me, I wouldn't have been saying the same thing. So that's something you can really just factor your opportunity cost when it comes to leaving a trade early or just leaving some money on the table, because that's what it happens as part of the days go by. So this is where I entered, and this is where I got hit out, because usually you have a large wick candle, and then that can push up, hit out all of the possible stop losses and continue to drill down. The funny thing is, my stop loss was around here. So at this point I would have lost 20. At around this point I would have probably made $80, which that's even better. But I'm just learning the system more and being able to spot the opportunities, which is my main thing. So this was the first trade of the day, and then in an effort to not over trade. I actually reduced the amount of shares that I was trading on the second trade. I saw the DXY beginning to kind of ramp up some more, and then I decided, all right, let me take another sell position. However, I'm just going to go with 8 shares. With the 8 shares, I'm just going to put it at a max risk of $8. So I could only lose $8, meaning I wouldn't have lost the money that I accumulated here, but I would have still had a position to get exposure to the downside if it were to go down some more. And it proved that I was right here, but still you have the transaction fees of $1.50 minusing from a profit, leaving me with a total profit of $7 on that trade from a 8 share risk there. And let me show you the entry now. So you minus 5 from this to know the time that I entered it, because this is London GMT time, and that would have been on the 10 o'clock candle, 10:51. I entered at 27163. So 27163, that's like one of the lowest of this candle. 27163, 27163. So 27160. So right there about, that's where I entered, and then my exit was 27037, 27037, and that's 27037. So right there. And is that right? Yeah, that's on the 11 o'clock candle. So a move from here to here is what I caught kind of cleanly there, but it wasn't. It could have been rode out for more, but that's how it happens. I just wanted to lock in some profits there. As you can see, the market began to go back against me at this part before drilling down, and then sometimes you just don't want to experience a lot of that drawdown. But another thing I want to note is that the market still came down, right? And the thing about this, it could have been tricky. It came right down to the point of support. If you look very closely, it came right down to that point of support and just tapped it. And that's a point of support that I actually created in a previous time frame. So I have a previous time frame, and I dropped the chart, and I could see that this would have been a level that the market might come down to. And as you can see today, the market came right down to there and kind of just tapped it and came right back up. So that's basically what happened today, December 19th, and I'm happy that I'm able to just share this with you, and hoping that I can just get more value and be able to expose anyone that actually watches my channel and participate, because you're going to see the entire process. You're going to see me journaling everything to the point where I'm beginning to up my risk size and the amount of shares I'm going to trade. So as we see how this week progresses and the following week, and you see a better consistent track record, say this week I have all green trades, that would be more of an indicator. Maybe I can start to up the shares that I'm trading, but I want to have that consistent track record to look back on and to have a feeling of the market before I start to do a higher shares. Like I'm starting to trade 50 or 100 or 200. That's the point where I begin to trade more shares, but I'm just gonna work on getting more consistent and having the system down. So from this week, Monday was a green day. Let's see how tomorrow turns out. I'm also seeing there's a possibility for the DXY to show you. It can even show you the reversal. It can show you where you enter. It lets you know immediately that you're wrong. You can probably go the other way and make money. But let's see. Let's see how tomorrow plays out. And I'm still quite wary of Wednesday, because Wednesdays seem to be quite like range bound, which is not something I'm trying to play. So let's see how it plays out, and basically I'll see you in the video tomorrow, December 20.